Right, so all of this you've covered already in FAC 1501, and that's why it's quite good if you've done either 1500 or 1501, because this module is a bit easier because you've got the right foundation. Okay, and you've already spent a whole semester on FAC 1501. Doing 1502 is quite a nice progression because it's building on what you already know. Okay, so first few weeks will just be revision. One or two slightly new things, but nothing like major, no big new sections. Okay.
Okay.
Right, so what is accounting? How would you describe it to someone who has no idea? You heard the app's definition of accounting, so what is your definition of accounting? Think about it. How would you describe it? So someone asks you, you're in the accounts department, you're dealing with debtors and creditors. So if they had to ask you, I want to know a bit more about this concept, how would you describe it?
It's what's an opsomming?
Summary.
It's a summary of the ins and outs of the business,
There we go.
money coming in and money going out.
That's a good answer.
To see the profits and...
There we go. Profit is something that we can see.
And if there's a loss, you can see that as well.
Correct. So why is it important to see if there's a profit or loss? Why is it important to see a summary of all these accounts?
To see if your business is making money or costing you money.
Correct. And if it isn't doing well, we need to do something. And if it's doing well, maybe we need to continue doing what we're doing. Okay, so the key is always on the decision making. That's the key. Okay, so you know what it is, but the focus is always on the decision making. Right, so accounting is just a way to present information. That's all. Okay, so remember, different things are communicated differently. So let's think of something that relates to your background. Okay, so when you were doing beauty, in beauty, what information do you have to take away from the customer in order to make a decision? Any example? Think about something that you needed information about before you could make a decision about something else.
Their health, because some of my products you can't use.
Okay, good. So now, do you agree that's information relating to their health? So if you're in the beauty industry, you need to know about their health before you can do the treatments.
Yes.
Okay, so the same thing happens in accounting. Obviously, we're dealing with finance. So before I can make a decision based on money, I need to understand how money is communicated. Okay, so what are assets, liabilities, income, expenses, capital, drawings, and all of that. Okay. Right, there's a definition in terms of the recording of information. Right, so we need useful information for decision making. How do we get the useful information? Well, evidence from economic activity. How do I know if something has happened? This you would have seen in 1501. They show quite a bit of them. What's the evidence of economic activity? So what tells me that a transaction has occurred?
There's money going in or money coming, or money coming in or money going out.
But what does that represent?
A transaction.
Okay, and transactions are recorded where? Source documents. Okay, don't you remember invoices?
Yeah.
And checks and counterfoils and all of that? Do you remember that?
Yes.
Okay, so source documents record the transaction and they act as proof that something has occurred. So if I buy something, I'll have a till slip or an invoice. If I sell something, I'll also have a till slip or an invoice, but I'll have the duplicate because the original gets given to the customer. Okay, so historical performance is key because we're looking at what happened in the past and we're presenting the information. So we communicate the information so someone can make a decision. Right, so where did you spend all of the budget? Was the budget used for expenses or was the budget used for assets, okay, to grow the company? Okay, so obviously if we look at your business, they sold the old furniture and they bought new furniture. Right, so that's something to consider in terms of performance. Okay, so you'll see new furniture will be bought. Okay, there will be an invoice for that, and the decision making could be, well, now you can use the furniture to create future economic benefits.
Okay.
Who uses statements? Lots and lots of different people use statements. So can you think of some examples?
Management, SARS.
Good.
When you open an account with a client.
Banks,
or
clients,
with a supplier.
suppliers, yes. Okay. And why? So why would SARS use it?
To see how much you're making so they can steal your money.
Yes, okay, so the taxes have to be paid, so if they know how much you've earned, they'll know how much to tax you, correct?
Yes.
What else? You spoke about managers, what would they need it for?
Okay, management would probably want the statements to see where's the profits, where's the losses.
Correct. Okay, so which items maybe are profitable, which items are not?
Yes.
Okay, which items sell and which items don't. Okay, good. So it's all used for decision making. You should be familiar with this concept, nature of accounting. Remember, things are always broken or taken back to its elements, broken down to its basics. Alright, so when we talk about nature of accounting, it's a means of communication. It's looking at standardization, familiarity, integrity. It's to keep everything consistent. Okay, so when I talk about assets, we all know what those are. Okay. And we can't change the nature of something. So for example, stationery is what?
Liability. No, it's an expense. It's expense.
Yeah, stationery is an expense. Okay, so we can't change its nature. Okay, when I buy stationery, I'm buying it with the purpose of using it. Okay, water and lights.
Expense.
Correct. Sales.
Income.
Okay, so do you agree it's a language for conveying information? Because when I talk about sales, you know what it is, I know what it is, and now we can make decisions. Okay, because we know sales is an income, not an expense. Okay. Financial statements are denominated in rands, and it's all for reporting. There's the diagram in terms of input and output. Remember, input is what? The transactions. Because what happens to those transactions? They get recorded. Okay, transactions will be recorded on source documents. Documents will then be grouped into journals. Journals will be posted through to the ledger. Then we'll create a trial balance to create the financial statements. Final goal is to make a decision. Right, so we don't look at the decision making too much in this module because it's discussed more so in the other modules, okay, the ones that come after this. Okay, generally the finance modules talk about decision making. Right, the cycle, they've given you an example in the study guide. It's literally in the first few pages here. There's a diagram. Yeah, so in that electronic copy, you'll see it here. Where is it now? They give you a bit of a diagram here where they look at the actual process. Okay. I can't find it now, but it's fine. We'll just refer to this example that I've got here. Okay, so that's the process. This process needs to carry through in order to get the finished product. Okay, which is the accounting cycle. Right. So you should be familiar with it from 1501. They spoke about transaction, source document, so on.
Yes, that was in one of the assignments as well.
Yes, yeah. So they tested the theory behind the scenes. In this module, from an exam point of view, they're going to test this: your rules and your application or disclosure. So in this module, you'll see quite a bit of statements where they'll ask you to draw up a statement of comprehensive income, statement of financial position, statement of changes in equity. Those are the statements that you'll learn about in this module. So it's focusing more on the presentation, right? So how do I show the profit or loss for a sole proprietor or a business? Here, I'm only going to be looking at this one, 1502. I'm not going to worry about these three. Okay, this is covered in FAC 1601, okay, which you don't need to do, so you don't have to stress about that. Okay, alright, so 1502 is only going to be looking at a sole proprietor, meaning one person running a business. Okay. You do cover a non-profit though. These are, they call them, what's the right term? Non-profit entities. Okay, so they call it entities, not organizations. Okay, but non-profits. So that's like your SPCA, your Nelson Mandela Children's Fund.
Yes, I know my
those type of
boss
things.
makes a lot of donations to
Okay.
all those non-profit.
And on behalf of the company or on behalf of himself as an individual?
Well, it depends. Sometimes it's on behalf of himself,
Yeah.
and sometimes it's the company.
Yeah.
Mostly it's the company.
Okay, see that's good because the company would then get a tax benefit, a deduction for donating. Right, so if you're a company or if you're an individual, a certain amount of your donations can be tax deductible as long as you've got it's a Section 18A certificate. Yeah, you might even have seen it working in your department.
Like for instance, when winter comes, he buys like 1,000 blankets, and then we donate it to the poor.
Okay.
Well,
okay.
Also,
no, that wouldn't count because you don't have a certificate.
Yeah, that's the thing.
Yeah.
Okay.
That's just additional CSI. Okay,
He doesn't even ask for certificates anyway because I make the donations. So he just signs it off.
Okay.
But he's very generous when it comes to it.
Yeah, that's good. Okay. Yeah. So there are situations where you can donate where you do get a certificate that you can use to claim against your taxes, and other times you don't.
Okay.
Yeah, but that's interesting. Okay, so do they make a profit?
Which?
The non-profits?
No, they don't.
They don't. Okay, but they can have a surplus though.
Yes.
So if lots of people donate, then they'll have more, so they can use that for the next period. Okay. Right, we spoke about users. These are other users, but you knew that already. You told me some examples. Do you still remember the difference between management and financial accounting?
Sort of.
What do you think it is?
Okay, management accounting is just the necessities for the managers to make their decisions.
Okay, when you say just the necessities, what do you mean by that?
Just.
So summary or detailed?
Summary.
Really? So your manager is only going to want to see the summary.
Okay, no.
Okay. Management accounting, managers need the most information. Do you agree?
Okay, so the financial accounting is the summary.
That's the summary. Okay, because financial accounting is for external users. Right, so SARS. Is SARS going to want to know where you spent every single cent?
No.
No. They just want the summary. How much did you earn? How much did you pay? What expenses are deductible and what aren't? Okay. But your manager is going to want to know how much went to this expense, how much went to that expense, and so on, because that's detail. Okay, so internal is always more detailed.
Okay.
External is more summarized. Which are we looking at?
Internal?
No, external. It's financial accounting.
Oh.
FAC.
Okay.
FAC. F is for the financial. Okay.
Okay.
All right. So we're looking at things more higher level in terms of summarize. So that's why we're looking at statements. We're not looking at the management accounting. That's MAC. Okay. There's a Mac module. You're doing the FAC. Okay. The FAC module. Okay. Right, you are familiar with principles and rules, so that's not too bad. Okay, you are going to have to identify different accounts, so that's the recognition. Right, so when I talk about furniture, what do you think of?
Asset.
Yes, see, that's recognition.
Okay.
Okay, when I talk about measurement, then I'm talking about the cost price. Okay, so how much did each of the chairs cost? Right, that's measurement. Okay, so X number of chairs times its cost price gives you the total for furniture. Policies is just how we do things, and that comes from the rules. Okay, International Financial Reporting Standards. What is disclosure? We spoke about it earlier. Presentation. Okay, layout, formats. Okay, how we present information. Structure, presentation, layout, formats. Okay, and then this is all background. So remember, the textbook is a great source of additional information. So if you wanted to know more about IFRS, the textbook actually gives that information to you. Okay, from an exam point of view, they don't test that. Right, so you're not really going to see questions about the detail relating to the theory, the behind the scenes. Okay, there might be a question in the assignment. Okay, but from an exam point of view, looking at past papers, they have given short questions 1 year. So in 2016, last semester, they did give, I think it was 5 questions of multiple choice.
Yeah.
Which is a little bit different to what they've done before. Okay, where they've only tested long questions, and they've always been like that, accounting stuff. Okay, so tier accounts, journals, etc. Okay, so they might be trying to test a bit more of the theory, but if they do, it's going to be 5 multiple choice questions. They're not going to give you like a 10-mark question on theory.
Okay.
Right, so if you want to, you can go read more about it, but it's not necessary at this level. Later on, if you do study more accounting, then they'll cover that in more detail. Is this important?
Yes.
Why?
Very important. Because
Why?
you need to know what is an asset, what is a liability, and so forth. And you need to know where it increases and where it decreases.
Correct. Okay, so the increases and decreases are important for balances. Do you agree?
Yes.
Okay. And if I know what something is, then I'll know what rule to use.
Yes.
Okay, that's key. Right, so if I know something is an asset, where does it get disclosed? Where do you disclose?
On the left-hand side.
Okay, well, left is the debit. That's where an asset's balance would be recorded. But where do I see all my assets? Statement of financial position. Okay, remember the statements that you covered right at the end of FAC 1501? Okay, so statement of financial position will record our assets. And which other account? Liabilities. Okay, remember the 2 get shown in your statement of financial position. Let's put a block around them. Statement of financial position. Agreed? What is income? Do you remember the definition?
It's money coming into the company, but
Well, that could be income, but it's a benefit, increase in benefit, or decrease in benefit, expense. Where do I show those two?
I don't know.
Statement of comprehensive income.
Okay.
Okay? Because what's the difference between the two? Profit. Do you agree?
Yes.
All my income minus all my expenses gives my profit. Okay. Capital and drawings. What's special about them?
Capital is money put into a business, or like furniture.
Yes, or assets. Correct. That's contributed by
The owner.
exactly. Okay, so that's an asset. Well, that's given by the owner. So because it's given by the owner, capital is capital. Okay, it's a contribution. Drawings is drawings. Drawings is a withdrawal. Okay, so taking from the business for personal use.
Okay.
Do you agree?
Yes.
Okay. Right, then you've got background information. Again, this isn't really something that will be tested because it's theory. It's more additional information that's nice to know. So when we prepare statements, statements are prepared on a going concern basis. Going concern means?
Like constantly.
Well, correct. So is the business going to close? No, the business will continue to operate. Okay, that's going concern. Relevance, what is that? If something is relevant, what does that mean? What does relevant mean?
It's relevant. It's I don't know how to explain.
Important, right?
Okay.
Okay, so do you agree? When preparing statements, statements need to be relevant. So you don't want unnecessary information, you want the important information. So when accountants prepare information, they normally check this, materiality. Okay, materiality means is it material, meaning is it going to affect decision making? For example, if this table had to be taken away from the office, would that be material?
Yes.
Why?
Because it's a table.
Okay, because it's a
It's an
large
asset.
table, it's an asset, exactly. So this asset would have value for the business.
Yeah.
If this big table had to be taken away, it's material, okay? But if, let's say, is that pen yours or the business's?
Mine.
Okay, is that pen yours or the business's?
Mine.
What isn't yours?
The calculator.
Okay, if the calculator had to go missing, is that material for the business?
Yes. Because we use this to work out our
Okay, so
profit.
it's a tool. Okay, so you're using the calculator a lot. Okay, but a calculator compared to the table, which has more value?
Okay, the table.
Exactly. So the table is probably maybe 1,000 rand or so, a few thousand rand, and the calculator is only
800 and
100 rand, 100 and something rand, hundreds of rands, not 1,000. Definitely not. A scientific calculator, about 300 rand max.
This specific calculator, I bought a few the previous time and we paid like 800 and something.
Each. That's a rip-off. Yeah. Okay. Those calculators, scientific calculators, max, I would say 300-400 rand max.
No, the one that I
Scientific.
showed you. Okay.
The one that you showed me are financial calculators. Those are expensive. Financial calculators are 500 upwards.
Yeah.
Yes, but these, no. Where did you guys buy them from then?
Nicholson's.
Don't know them.
Yeah,
Like
it's-
Walton's.
It's
Yeah.
a small company.
Okay. Well, that's
Like
interesting.
hidden away.
Sure, that doesn't sound so good, yeah. But yeah, I mean, you see the scientific calculators quite often. But the point I'm trying to make is scientific calculator versus desk.
Okay. Desk is more.
Desk
value.
is more material. Desk is more relevant compared to the calculator, or even just a pen or a pencil. Okay, so
Okay.
if a pen or pencil had to go missing from your office, material,
Yeah, it wouldn't bother us.
it wouldn't bother you. It's not really relevant or material. It's so small.
Yeah.
Okay, but if one of the machines had to go missing, that's a problem. Okay, or if one of the computers had to go missing, that's a problem. Okay. Faithful representation, you need to obviously be honest and accurate. Comparability, we need to be able to compare different accounts or different years. Okay, so 1 year compared to the other year.
Okay.
Verifiability is checking. So if you do have an asset, have you checked where you've bought it? For example, do you have the proof? So you're verifying. So for example, in this room, there's how many chairs?
12.
No, 8.
8, sorry.
Okay, 3, 6, 7, 8. Okay, so obviously verifiability would be like an asset register. Okay, somewhere in the company's records, you would have 8 chairs marked somewhere.
Okay.
Right, so you'll know and you can verify, and you'll also have an invoice because these chairs would have come from somewhere.
Yes.
So then you would also have that as verifiability. So it's almost like an audit trail. Okay, so auditors check for that. They check statements in terms of like background information. So how did you create the information?
Okay.
Right, timeliness, we want information that's relevant to today and not outdated. And understandability comes back to what we spoke about earlier. Do you know your elements?
Okay.
That's what it comes down to. Okay, that's how you understand and interpret information. You relate it back to the elements. Okay, number 2, financial position. Someone who doesn't know what accounting is asks you what it is. What do you say? Try.
It's the position on an accounting basis, how your company looks on paper.
So how would you measure that for a company? You're right, but how would you measure that? What would you be looking at?
The financial statements.
Well, there's many. There is a statement on the financial position. What are you going to see in that statement?
If your company's making a profit or a loss.
Not financial position. Profit and loss won't be there.
I don't know.
Profit and loss is financial performance. Remember that? Okay, it's been a while since we've covered this. This is what we would have covered right at the beginning of 1501.
Okay.
Right, so financial position is looking at this. Assets minus liabilities.
Okay.
Okay, because that's financial position. Financial position is what do you have?
Okay.
What do you have today? Okay, what do you have tomorrow? What do you have in a year's time? What do you have at the end of the year versus what you had at the beginning? Right, so financial position is looking at those two. This and that. That's the key. And if I subtract the two, I'm going to get owner's equity.
Okay.
How do we measure it then? So how do I measure an asset?
Income minus... No.
You're always stuck on income minus
No.
expenses. An asset. So think of any asset. Now think of how you would measure it. Think of an asset first of all. Come, think of an asset.
Bank.
Okay, so how would you measure a bank?
With a statement.
Exactly. Okay, so you would look at the statement because the statement would tell you how much is in the bank.
Okay.
Think of another asset.
Computers.
Okay, a computer. How would you measure the value of a computer?
By the invoice that you got when buying the computer.
Exactly. So you could measure it at cost, right, which you've covered before. Remember historical cost?
Yeah.
Historical cost is what I bought it for. Is that going to change?
No.
No. Okay, but how is how is the cost of a vehicle different to its current value?
Because the value of the vehicle decreases.
Exactly. So the value of the car when you bought it will be at its cost price. The value of the vehicle now would be its carrying value. Do you agree?
Yes.
Okay, so what is the asset worth today? Right, and if you spoke about bank, how much do I have currently in the bank? Let's talk about a loan, a liability. How would you know what the liability is measured at? Are you guys renting or are you paying off a bond?
Paying off a bond.
Okay, so if you're paying off a bond, how do you know how much your loan is? You check the statement. Okay, so you are obviously going to be contributing towards the repayments. Okay, so is the liability going to change?
Yes.
Yes. So when looking at the measurement, I'm going to use the liabilities current balance outstanding. Do you agree?
Okay.
Is that another way of measuring the liability?
Yes.
Yes. Because now today I'll know how much is outstanding on the house.
Okay.
Okay. When do we measure it? That's easy to answer.
At the end of every month.
Possibly, or
As they need it.
exactly. So it's always at a moment in time. So if you wanted to know what the financial position is today, you could work it out.
Okay.
Tomorrow you could. End of the year you could. End of the month you could. Okay, but it's at one point. Right, because it's position. Position is what do you have now and what do you still owe. And the difference is the owner's equity. Right, so that you've seen before, hey? Counting equation.
Yes.
Why do we need it? How many how many entries does a transaction have?
Countless. It
No.
can have countless.
How many entries does a transaction have?
Oh, A. Okay, one.
So, it doesn't have one. One transaction will have two entries.
Okay.
Isn't that the rule you've been using?
Yeah.
What is the rule? What does the rule say?
If it increases on the debit side, no, I don't know.
Every debit has a
A credit.
credit. Okay, so how many entries do you have for a transaction?
Two.
Two. Okay, so when I record, so if the business sells something, let's say, okay, business sells goods for cash. Give me the two entries.
Say again?
Business sells goods for cash. Give me the accounting entries.
Okay, sales, which is an income,
Debit or credit?
will increase on the credit side.
There we go. There's the one entry.
Okay. And then bank, which is an asset, will increase on the debit side.
There we go.
Okay.
That's the other entry. 2 entries meets the definition of the debit and credit. Every debit must have a credit. Okay, so looking at the financial position, you're always going to have accounting equation, okay, considerations, because owner's equity comprises of the A minus the L. But owner's equity will also comprise of income, capital, expenses, and drawings. Okay, so if I get more income, would I have more owner's equity?
Yes.
Yes. If I give the business more, will I be entitled to more?
Yes.
Yes, I would. If I have more expenses, will I be entitled to more or less?
To less.
You'd be entitled to less. So if there's less to be entitled to, the owner's equity will decrease, because more expenses mean less profits.
Okay.
Okay. Drawings, if I take more from the business, will I be entitled to more?
No.
No, I'll be entitled to less. Okay, so this all gets covered in more detail later when you look at the financial performance. Right now, we're just focusing on financial position. So financial position is looking at assets and liabilities, because that tells me what position I'm in, good or bad. You always want more assets than liabilities. Okay, that's good financial position. Right, there's the definitions that you should still remember. Hopefully.
Yes, sort of.
Okay, keyword for asset is resource controlled by the business, and then gives rise to future economic benefits. Liability keyword is obligation. That's what I need to remember. Okay, so if I'm studying definitions, why do I need to know the definitions?
Because you need to know what an asset is and what a liability is.
Correct, so I can identify what it is, correct. Okay, so if you know what an asset is in terms of its definition, anything that meets that definition is an asset. Okay. You get 2 types of assets and liabilities, non-current and current. What's the difference?
Current is less than 6 months.
Good. No, not less than 6 months. Less than 12 months. Within 12 months.
Less than 12 months, sorry. It's less than a year.
Less than a year, correct.
Yes,
Or
and non-current is more than a year.
correct. Okay, so less than a year or more than a year. That's right. Okay, so non-current is obviously greater than 12 months, long term. Okay, and current is less than 12 months, short term. Perfect. And that's exactly right. Okay. Right, so you've got the accounting equations here. A equals OE plus L, OE equals A minus L. Do you agree I can also make L the subject of my equation, right?
Yes.
What would L be equal to? Test your maths.
L will be equal to owner's equity minus assets. O plus assets.
Assets minus owner's equity. Okay, liabilities equal assets minus owner's equity.
Okay.
Right, so all accounting transactions will affect the accounting elements and will be recorded accordingly.
Okay.
We know that. There's the double entry rule, which we spoke about earlier. Everything will have a debit and a credit. Okay, your job is to understand where to post what. That's the key.
Okay.
Right, so a financial statement is going to do what? Present information. Okay, what did we just talk about? Financial position. So financial position is going to represent what? Assets and liabilities. Right, so that's why in the statement of financial position, you're going to see those 2 main areas. And the areas are very specific because they actually break it up. They break it up into long term and they break it up into short term. Okay, for an asset. So an asset is a resource, liability is an obligation. The difference is obviously equity. So equity is part of the statement, but it's not detailed. Okay, where would you see the detail? The detail is in its separate statement. The statement of changes in equity. Okay, which is something separate, which is something different. Okay, right. You don't really see too many statements of changes in equity in this module. You do see quite a bit of statements of financial position, and you see quite a lot of statements of comprehensive income. Okay, so profit and loss and financial position. You won't see the changes in equity too often. Right, and then you've got a note there. Again, you need to apply the rules. That's the key. So you know what the rule says. Application is everything. So when interpreting a transaction, you should be thinking about debits and credits. That's the key. Okay. Right, study unit 3, financial performance. What does that focus on? Think about it. Performance. How would you measure performance? Income is part of it. Okay, so do you agree if you sell something today, is that good or bad?
Good.
It's good for today.
Yeah.
But then the rest of the month you don't sell anything.
Oh, that's bad.
That's bad. Okay, so do you agree performance for the month must be looked at over time? Okay, so how would you know if it's a good year or a bad year?
If we made a big enough profit.
Correct. Okay, if you made a profit compared to a loss. Good. Right, so financial performance is exactly that. Profit equals income minus expenses. Now tell me how you measure it. So how do I measure income? How do I measure an expense?
Okay, income is your wait.
Think about it. Measuring. When do you measure income?
Income minus expenses.
That's profit. That's how you measure profit. How would I measure an income? Just an income. Cash versus accrual, right? Cash basis versus accrual. Okay, so what's the difference? Well, cash is when I receive it, and accrual is when I earn it. So income will be recorded when I earn it. Expenses are going to be recorded when you've incurred it. Okay, so if you buy, if you pay for water and lights, okay, water and lights, if it's billed, is billed after you've used it. Do you agree? Okay, so you use the water and lights for the year, for the month, and then the next month you get the bill. Okay, so you've incurred an expense. You've used the water or the electricity. If I earn something, you're entitled to it, right?
Yes.
Okay, so do you agree you're working every day for the company, right?
Yes.
Do they pay you every day?
No.
When do they pay?
At the end of the month.
Correct. So have you earned your income?
At the end of the month, yes.
No, you earn your income every time you come to work.
Okay.
Isn't that so?
Yes.
Okay, so today you've earned your income because you've been here for the majority of the day, right? Okay, you don't get paid today, so do you receive cash today?
No.
No, that's cash basis. Accrual is I earned income today, so I'll record it today.
Okay.
When I receive the income, then that's a receipt. That's different. That's not income. Okay. When do we measure it?
At a certain point in time.
Not at a certain point in time. That's for financial position. We just spoke about it. Do I measure
at the end of the month?
Over time. Okay, so at the end of the month, you'll be looking at the month's performance, right? Okay. Is that right?
Yes.
Okay, definition-wise, you should be okay with these. Definition for income and definition for expenses. What is income? Increase in benefit. What is an expense? Opposite, decrease in benefit. That's all it is. Okay, so these are easy, and they generally arise from assets and liabilities. Okay, so an asset that's used productively should generate income. A liability would generally create an expense. Okay, we would have to pay interest. Right, a few questions here. Why do companies operate?
To make money.
Well, yes, so it should be value first and then profit. Okay, so value is the key. So create value and then you'll derive a profit. Okay, because when a business starts, value is why they started the business in the first place. Profit is from operations. Okay, so operating for a few months, few years, depending. Okay, who's entitled to the profits?
The owner.
Exactly. How do we calculate it? Can we know this?
Income minus expense.
Okay. Correct. Okay, so when will I have income? When I earn it, right?
Yes.
If I have an expense, I've incurred it. What's the relationship with owner's equity? Well, let's have a look. If I have more income, what will happen to profit?
It will increase.
Correct. And if profit goes up, what happens to owner's equity?
Goes up.
Correct. Okay, so owner's equity increases with?
Income.
Correct. If I have more expenses, what happens?
Owner equity decreases.
Why?
Because there's more expenses.
Which leads to a lower
Income.
profit.
Okay.
Okay, more expenses, less profit, less owner's equity.
Okay.
Okay. Format again, just appreciate the format. So I've put page references here that you can use in terms of the textbook, so you, or the study guide. You can reference either or. Just appreciate what they look like. Remember, with accounting, you cover these different sections, and then at the end, they all
Work together.
consolidate. Okay, come together, and you get the big picture.
Okay.
Okay, so we're looking at individual components in order to create these statements. Okay, the general format, income minus expenses. So here, I've got income, which is sales, minus an expense, which is cost of sales.
Okay.
Gives me a gross profit. If I add other income minus other expenses, gives me the profit or loss for the year. Who gets the profit or loss?
The owner.
The owner's equity. Okay, owner. Correct. It affects owner's equity, either positively or negatively, depending on the situation. Right, there's your definitions for capital and drawings. What is capital? We spoke about it earlier. I asked you. Manual assets contributed to the business for whose benefit?
For the owner.
For the owner's benefit. Exactly. So owner's equity will also be affected here.
Okay.
Right, that's why you've got this equation. Owner's equity is capital plus or minus the profit loss minus the drawings. How do I calculate profit? Income minus expenses. That's it. Okay. Right, and that gives you the owner's equity.
Okay.
Right, drawings we spoke about earlier as well. Manual assets taken from the business for personal use. Remember, the word personal use must be there. Okay, so you took something for your child to use at home, okay, or you took something for your personal benefit, okay, where you actually use the item.
Okay.
Make sense?
Yes.
Right, and then the rules again. Are rules important?
Yes.
Very important. I can't stress it enough. I've stressed it before, I'm going to stress it again. The more you know the rules, the easier accounting is. Okay. Right, then we've got some examples here. Okay, and the examples that I've got here are similar to the ones in the textbook. Okay, so at the back of chapter 3, or 2 actually, okay, 2 gives you a few here, owner's equity, okay, and liabilities. And then chapter 3 gives you a few here, which is income and expenses. Okay, so after today, we would have covered the first 21 pages.
Okay.
Okay, it's very short. Each chapter was like 3 pages, 4 pages, 5 pages. Right, so the first 3 are very basic because they've assumed that you've got some background in terms of accounting. So you've done 1501, okay, and there, those sections were slightly longer.
Yes.
Right, because you had more examples, you had more theory as well. Right, so I want to see if you would be able to calculate the missing figure, capital. What do I do here? What's the first step? I've given you the working. I want to know what the step is. What's step 1? What do you always do?
You need to see which is an asset,
Correct.
which is a liability.
Step number 1 is to identify what? The
Assets
accounts.
okay.
Okay, identify the accounts. Right, so bank is what?
Asset,
Vehicle,
asset,
equipment.
asset.
Good. So you know there's 3 assets here.
Yes.
Then we say assets equal owner's equity plus liability. So do you agree if I add all of those up, what do I get? 16,000.
Okay.
Okay, did I have any liabilities here?
No.
No. So owner's equity is going to be what I'm left with. So 16,000 equals owner's equity plus 0 liabilities. So owner's equity, which is the capital, is actually 16,000. Okay, but you've got that working there. I've given it to you.
Yep.
Okay. Okay?
Okay.
Right. There's one for you to try. Right, so I've done one with you. First step, identify accounts, then use the accounting equation to find the missing figure. Right, so I want to know what insurance is in this particular example. Okay, I'm going to give you some time to work it out. Let's see if you can get it. What did you say capital was?
Asset.
No, capital asset.
It's an owner's equity.
Capital is capital.
Oh,
It's
shucks. Okay.
special. Hey, you forgot all your basics. Okay. Capital is capital. Bank is
Asset.
equipment.
Asset.
Stationery.
Expense.
Insurance.
Expense.
Rent income.
Income.
Furniture.
Asset.
Creditors.
Expense.
No. Creditors. What is a creditor?
A creditor, it's credits. It's, I don't know.
What is a creditor? You deal with creditors, don't you? Who
No.
are they?
It's money. They owe us money.
No, they don't.
Oh.
Those are called debtors.
Oh yeah.
Debtors owe you money.
Okay.
Creditors,
So this is an asset.
it's not an asset. Debtors is an asset because they owe you. It's a resource, right?
Okay.
What is creditors?
I don't know.
Think of a creditor.
I don't know.
You deal with them, don't you?
No, I usually deal with the debtors that owe us money.
Okay, so you're dealing with the people that owe you, which are the assets.
Okay.
So the creditor would be the supplier.
Yes.
And that is viewed as what?
Liability.
That's the answer. Okay, so a creditor is an obligation because I need to pay them, right?
Okay.
Loan?
A liability.
Why?
Because we owe somebody money.
Exactly, it's an obligation. Okay, so now you should be able to get expenses. Just write down the equation for accounting, or the accounting equation. A equals.
OE plus L.
Okay, what are you searching for? The missing insurance figure. Right, to try it, it's a bit of maths. Let's see how far you get. Okay, because now you've got the right account, so you should be able to get the right answer.
But I can't, yeah.
Okay, so this is how you would do it, right? Do you agree I need to fill in all the values? Okay, so what are my assets? Well, bank. So 10,000, okay, plus
5,000.
5,000
Plus 17,000.
plus 17. Do you agree?
Yes.
Anything else?
No, that's it.
No. Owner's equity? 50. Right? What else? What else affects owner's equity?
Expenses.
Yes, and?
Liabilities. No, not
No,
liabilities.
income.
Income.
Okay, remember we said income is going to do what to owner's equity?
Increase it.
Exactly. What is expenses going to do to owner's equity?
Decrease.
Exactly. So do you agree here I'm going to add What income do I have? 100,000. Okay. What expenses do I have? Stationery. So I'm going to say minus. I'm running out of space here. I'm just going to write it underneath. Minus 2 minus insurance. I don't know what it is. Okay. Plus liabilities. Plus. How many liabilities do I have?
2.
10 and 5.
Yes.
Right. So now can I solve for that? No.
Yes.
Should be able to.
Yeah.
Okay. So quickly calculate on the calculator.
No. This is what I get, but it can't be.
22,000. Okay, so let's add up all the left. So mathematics, if you've got an equation, add up the left, then add up the right. Okay, so what's 10 plus 5 plus 170? Quickly work that out.
10 plus 5 plus 170. One 85000.
Write that down. So what is that, left or right? It's the left hand side. 185,000 equals, let's work out the other side. Okay, so now what do I have on the other side? I've got a bracket with amounts and I've got a negative insurance, right? Okay, so add and subtract all the figures, the numbers.
One 163.
Happy with that?
Okay, minus insurance.
Now we're searching for insurance.
Excuse me?
Now we're searching for insurance.
Okay, so it's
Minus 22 or 22, depending on which way you take it.
was I?
Okay, so
I took
20.
it that side, so
Okay, 22,000 represents what?
insurance.
Yes, the missing amount. Okay, and those are the type of questions. And I've actually given you a more difficult one than the ones that they've given you in the textbook.
Okay.
These ones are a lot easier because they don't give you everything in one. Okay, they either give you all assets and liabilities or they give you all income and expenses. Okay, I've tried to be a little bit different where I've given you both assets and liabilities and income and expenses in order to find a missing figure.
Okay.
Okay, it's a bit of a challenge.